We got Scott on as well. He's going to be leading most of the presentation. So, Scott, how are you feeling today? This is a new system, a slightly modified system you've put together. Would you call it a brand new system, or
it's not? It's not a completely new system. So, I'll explain more. But what it is, it's an improvement on the failed breakout system that makes it much easier to trade.
Yeah, because there's a learning curve to the failed breakout system. It is, there's sets of rules, there's charts, there's 4 or 5 time frames you need to follow. You need to look for specific setups in each.
No, dude. You haven't seen this yet.
No, the failed breakout, not this. This is much easier.
Yeah, this is dramatically easier than failed breakout.
Yeah, this is simple.
So what happened is, I started teaching the failed breakout system after the last webinar. And I thought, well, it's kind of like fundamentally dishonest to teach a system and not actually trade that system. Like, that's the kind of thing that I hate when other people do. So I started trading it, just monkeying around myself, just, taking like 5 trades a week or something, just hardly at all, just doing enough that I could say that, okay, I'm not a fraud. And then I realized that it just didn't suit my lifestyle at all. Like, I want to get my work done. I want to go to jiu-jitsu training. I want to go lift some weights. And for me, the failed breakout system was anchoring me to the screen. I found myself taking my laptop with me. And are all these people here? Like, I can't see them in the chat.
Nobody's just replying in the chat yet. We got a couple of people saying hi, but yeah, we got 18 people watching now.
Okay,
so
I can't see the chat. How can I see the chat?
Here, let me send you here, but you should mute it. I'll send you a link in email. Let me send you here, but you should. I actually did see when you said hey in the group chat, that showed up over on the right.
All right. Okay.
Let me see if it shows up for everyone as well.
It doesn't matter.
No, I think that's just a private chat for you and I. You talk. I'll moderate the chat.
Okay, yeah, I don't need to see the chat. So anyway, yeah. So what happened was I started trading this failed breakout system, and the way I trade the failed breakout system is I use if a failed breakout entry trade fails, and then there's an opportunity to re-enter, I take the re-entry using some of the old Crazy Ivan patterns, and that's a pretty good way of doing things. But what I realized is that I kind of preferred the Crazy Ivan patterns over it, but I also found that the Protect R exit methodology wasn't ideal for it. Protect R exit methodology was designed for a single bar stop loss entry, so it works really good on shooting star entries. It works really good on straight pattern based entries, but you're never going to catch 4 and 5 R winners with it. So it was a pretty simple hack to take some old data, because we have a fuck ton of old trade data on it, like 350 trades, and just work out some middle of the road, reasonably accurate exit methodology, and then start trading it. And what I found is that when I started out trading this failed breakout system, and my performance was terrible. Like, I made a mistake a week. I was missing trades. It was. It was actually I was making money, but my performance was not what I call pro level. So this new system is really simplified enough that your screen time is limited to a maximum of half an hour a day total. So if you're spending more than half an hour a day total, you're doing something wrong. And
it's attending 6 rollovers.
Yeah, you could cut one of those out, to be honest, and
the one that's right at the mark, right around now, like 2 hours before now.
Well, also you get a very good idea of which markets are trending. Like let me show you. So how do I share my screen here?
On the left, you should have a green button at the top left that says screen share.
Yeah, okay. Okay, so yeah, how do I turn this? How do I turn the pointer on again?
How'd you do it last time?
If that's
No idea. I've never presented one of these on YouTube. So you
all right.
let's get a control room button. Does that do it?
Okay, so you can see you can see my screen. How do I microphone settings? Okay, so I'm just gonna have to do a quick Google and figure this out.
Okay, we're in pre-game mode right now. We're 2 minutes before the start, so you're good.
Can you see my cursor, Daniel?
Let me see. No.
Okay. Dude, you're gonna have to figure this out for me.
Yeah, I'll figure it out and I'll tell you right now. What happens when you hit the little control room button on the left?
What's the control room button on the left?
Go to the left. It's the little button that's looks like air traffic control.
The fuck does air traffic control look like, motherfucker?
It's below Q&A, dude.
I don't have that. I've got a chat. I've got a screen share.
You got a yellow showcase, you got a Q&A, and then you have a control room.
I don't have any of that shit.
Hey, I'll figure it out during the call. You can start the presentation now.
You need to sort this out, dude.
I'll sort it out while you're talking. Just start the thing, you start the PowerPoint, and then I'll get it for you in a couple of minutes.
All right. How many people we got online now?
You got 37.
All right, guys. Okay. So okay, guys. So welcome to the system trading webinar for today. Let me just start this bad boy. I'll kill my charts because we don't need those. All right. Okay, I've got the pointer on. Okay, that's cool. Okay.
Got it on?
Okay, can everyone see this? Is everyone cool?
Yeah, you look like you are coming across now. I got the PowerPoint up. Yeah, you're good to go, buddy. Let's do it.
So it's 6:01. We should leave it just a couple of minutes just to get the stragglers coming in here. So I'll just yak for a bit about exactly how. Can everyone see this?
Yeah, it's coming across, dude. It's working.
You sure? Because I've got a little. Okay, I'm screen sharing and presenting to everyone.
Yeah, 100%. You're all good.
Okay. No, I'm not all good.
I could see the pointer before. I don't know if it's gone now, or I can still, or if you took it off, but it was there earlier.
Okay. So what happened for me was the last webinar we taught the failed breakout system, which is a good system, but I hadn't traded it for a couple of years, and I got a heap of questions about it, and I realized it was fundamentally dishonest to teach a system that I'm not currently trading. It was it's kind of a shit thing to do. And it's the thing that I hate when other people do it. So I thought I'll just trade enough of this failed breakout system that my knowledge is up to date, that I feel like a legitimate expert again. You know, I've got a lot of experience with it, but I just hadn't traded it since 2014. So anyway, I started trading it, and I realized that this failed breakout system is a great system. It's a strong edge, but it was just really getting in the way of my life. Like I'd want to go to jiu-jitsu training, or I'd want to go to lift some weights, and I'd have a trade about to kick off, or a trade that was already ongoing, and I found that I was spending too much time watching the screen, and too much time watching the screen adversely affects your performance in a dramatic way. And for me, anyway, personally, when I spend too much time at the screen, it sucks the fun out of life. And I thought maybe I can take the existing data I have and use this to build a more mechanical version that's got less discretion. So here we are. So today's webinar is about intraday trading for the non-expert trader. And the failed breakout system is an expert level system. This is a non-expert system. This is the version that I'm currently trading now. It's for FX, it's for futures, it's for stock indexes, and I believe you can also trade it for stocks, but I haven't traded it for stocks. I'm not a stock trader. So what you're going to learn today is that intraday trading is really the only practical path for traders with small accounts. You know, if you've got a $10,000 account or a $20,000 account, you know, going and, you know, running Thor to try and average 20% compounding 40% in a good year, it doesn't even pay for all the time that you took out doing it, let alone the risk that you took. But the problem with intraday trading is that intraday trading is really hard, and intraday patterns are prone to morphing. Intraday technical analysis is inherently less reliable, and intraday trading just requires more skill and more time. And so my question is, can we make it simpler? Can we make it easy enough to be practical for the novice? And I think we can. So the bottom line, you strip all the crap out of everything. If you want to earn more from a small account, you have to take more trades. You know, if you're risking $1,000 a trade, and on average, after you take out the winners and take out the losers, you're making $200 per trade. If you want to make $50,000 a year, you have to take 50,000 divided by 200 number of trades. That's just what it is. It's very simple maths. But the problem with taking more trades is that you have more opportunity to make mistakes, both in execution and in psychology. And the psychology mistakes tend to be where a little episode of bad trading sets off a chain reaction of you behaving like an absolute noodlehead for a week or two until you get it back under control. And so what we want to do is, can we simplify this process to make it viable for the non-expert trader, to make it viable for the guy who hasn't got thousands of hours of meditation or psychotherapy or whatever else it is? Can we simplify it? And so what you're going to learn today is I'm going to show you the exact process I used to rapidly prototype the system using existing trade data that I had. And I'm going to show you how I was able to shortcut the design process by leveraging previous work. And so because I'd traded the failed breakout system for such a long time, I had like 350 screenshots and trade records. And so I was able to just pull those exact same charts up and find equivalent entries at exactly the same time. So usually when you build a discretionary system, you have to forward trade for quite a while, because back trading in discretionary systems is not a very good idea, because you just fool yourself. You say, I would have taken this one, but I wouldn't have taken that one, would have taken this one, wouldn't have taken that one, and you're just lying to yourself. So what I had is I had a whole pile of trade records that I knew for a fact I would have taken this trade because I did take that trade. So what I'm going to show you today is how to implement this system into your life with a minimum of risk. We're not going to be making any big moves or rolling the dice in any serious way. So if you can do me one favor, I speak really quickly. I don't want you to miss details. I'm going to go really fast. Please turn off your mobile phones, shut down your Facebook, your Skype, anything that's going to distract you. There really, really is a lot of detail that we've got to get through today, and I'm going to move fast. Okay, so we're introducing the 4-hour mechanical system. It's new, so I haven't thought up a cool name yet. Now, if you can imagine, all systems that you can design are on a spectrum here, from pure mechanical to pure discretionary. And a pure discretionary system might be, I just pull up the charts every day and take the trades that I think are going to work. That might be pure discretionary. And pure mechanical might be something like a classical trend following system or a mean reversion system or something like that. Thor, for those of you who know the system, is probably like 95, 90% mechanical. The fail breakout system is probably 75% discretionary. So what I wanted to do is put something that's further on the mechanical spectrum. So where does this sit? It sits about 3/4 of the way towards mechanical. It's not as mechanical as Thor. It's far more mechanical than the fail breakout system. So if this thought of having less freedom, less flexibility, more exact rules to follow appeals to you, this system's probably going to work for you. If you inherently revolt at the idea of being forced to take every trade in a mechanical rule set, then probably this might not be for you. So everything exists on a spectrum, and where we are on the spectrum is about here. So why did I build this? Don't I have enough systems already? So like I said, after teaching the fail breakout system, which I haven't traded since 2014, I realized it didn't suit my lifestyle at all. So I liked the results. The edge was fine. The principles behind the system are really sweet. But what I didn't like was the complicated decision process, and I didn't like the hours in front of the screen. It really upset me. And what I found when I spend too many hours in front of the screen, it's very difficult to disconnect from the screen. I found myself not as present with my wife. I found myself using my phone too much when I wasn't in front of the computer screen. I found myself just not enjoying things as much. So I wondered if I could make the system more mechanical, but still keep the outstanding performance. So in just a few words, what are we doing? We're doing a daily scan for suitable markets to trade. It's very similar to the fail breakout scan. You could do both together. Once you decide a market is in your watch list for the day, then the system becomes mechanical. Then you take every trade except if you reach position sizing limits, which we're going to cover. So there's no thinking beyond the first few minutes of the trading day. So you do all your thinking in about 5 or 10 minutes max, and then after that, you are a mechanical trading monkey, nothing more. You're not experiencing the thrill of victory. You're not experiencing the agony of defeat. It's not all down to you reading the charts. You're not some special, unique snowflake. If Daniel and I have the same watch list for the day, Daniel and I are taking the same damn trades for the day. And if one of us isn't, then one of us is making a mistake. So if that kind of thing appeals to you, this system may be for you. Now, what we won't be doing today is this system is built using the building blocks of patterns that I use every day. I talk about every day on the list. I'm almost certain that all of you know these patterns, but I'm not going to waste the limited time that we have here just relearning stuff that we already know. Like, that would just be filler, to be honest. Like, if you don't know what a shooting star, if you don't know what a retest, you don't know what a retest variation setup is, don't worry, we'll give you a document with the rules at the end. And if you have the system building masterclass or the price action masterclass, it's all in there. We won't be using any beginner language at all. And the reason for that is that the internet is awash with, how to trade beginner advice. Here's this indicator, here's that indicator, here's a head and shoulders. Some of it is even good, but not very much of it is even good. And I'm not interested in teaching beginners, to be honest. The reason I'm doing this is because I reached a point in my trading journey where I couldn't find what I wanted. I was better than the beginner advice, but I still wasn't profitable. And so I needed to find people who were really good, and not just really good, but they were really good at teaching the expert stuff. So when I tracked these people down and learned that expert stuff, the stuff that I teach now is the stuff that I always wanted to find, but I never could. So if you're watching this and the stuff starts going over your head, you got a couple of options. You can either, hit me up by email or on Skype or on Facebook, and I can answer your questions, or you can start with the price action masterclass and come back to it. So does anyone like bribes? This marketing guy who told me how to do this told me I need to give you an ethical bribe. So if you stay to the end of the webinar, I'll give you this PDF document, which I'm working off now. It's got all the exact entry rules for the system you're going to see today. What it means is that you don't have to take written notes, because you're going to get this exact same thing that you're seeing. You're going to get a PDF of this presentation. So don't worry about taking notes if you're not. Just sort of watch it in a free-form way and try and get understanding rather than write down details. So Who is Scott Phillips? I'm a trader. I'm not a trading educator. I hate those guys. I really hate those guys. So most of you know me from the price action masterclass or my emails or the system building masterclass, but I'm primarily a fully systematic trader, mostly in the futures markets. Also, I do a very occasional stock trade, but hardly at all. I trade FX and I trade a little bit of crypto. Take about 500 trades in a normal year across 3 core systems. So most traders specialize in one narrow area of system design, but I've been exposed to many different system types through some of my previous mentors and through Van Tharp's Super Trader group. So I've seen all different types of systems and many different approaches. So I've seen discretionary, I've seen mechanical, I've seen automated, I've seen very quantitative approaches, I've seen trend following, I've seen mean reversion, and I've worked with guys like Ivan Krastens, who came up with some of these patterns that we talk about, Linda Rashke, who's a market wizard, who's a wonderful lady, Al Brooks, who was enormously helpful to me, Van Tharp and Ed Sekoda, were the main influences on my trading career, as well as Ken Long, Gabriel Grammatidis, who came up with the original version of the failed breakout system, Michael Merle, who's a mole from Evil Speculator, who some of you know, and a guy called Laurent Benoit, who's a very good hedge fund trader, who's taught me some fascinating stuff. And I've done some stuff right, I've done some stuff wrong. But the stuff I discovered the hard way, you get to cheat and discover the easy way. So there's a fundamental misconception about trading, which I want to clear up now. So most of us start trading by learning some technical analysis, by finding a chart we like, by placing a trade. And it seems easy before you do it. It's easy when you're reading all these like babypips.com blogs on how to place a trade. But this sort of freewheeling, shoot from the hip style of trading, it's the hardest type of trading there is. It's really, really hard. Not to get one trade right. That part's pretty easy. It's hard to get it right consistently. So the big question is, why do we try the hardest thing before the easiest way? And I'm going to teach you 3 big secrets about this stuff. So number 1, system trading isn't just more profitable. It is far easier. System trading is way easier, like way easier. Secret number 2, getting better and better at technical analysis won't make you consistently profitable. I have a buddy called Tim Knight who runs a great blog called Slope of Hope. And this guy is the best chartist that I've ever seen. Like, he is a legit good chartist. He's better than me, way better than me. He can't make money to save his life. He's spent the last 2 decades getting better and better at technical analysis to the point where he's one of the best in the world. He has exactly $0 to show for it. So what I realized when I saw people like that is that this guy had everything. You know, he had a decent sized trading account to work off. He had good contacts. He had good mentors. He has excellent charting knowledge. He's passionate about the markets. He's endlessly fascinated by it. He can't make money because he doesn't trade with a system. So most trading psychology problems, which everyone spends a lot of time thinking about, they really completely disappear when you trade with a system. Not completely, but maybe 85, 90% of stuff that you think is a trading psychology problem is really just because you're not trading with a system. So this was me before. I was constantly worrying about what the stock market would do tomorrow. I'd spend a lot of time researching news and opinions. I'd gravitate towards, I'd see some blog post on Seeking Alpha that agreed with my opinion, and I'd read that to death, and then not read one that told me I was wrong. And I was always secretly hoping for market crashes. It was like I was always trying to top pick perma bear, pick the market top, and I'll make it all back. And that was a very poor way to approach trading, and I lost money doing that. So after, I don't really give a fuck. The stock market is going to be up, down, or unchanged, and my job is not to predict the stock market, which is almost impossible, if not impossible. My job is to follow my trading rules and not to worry about the things I can't control. So what I discovered is that stressful feedback loops happen when you worry about the stuff that you can't change. So most trading psychology problems are not really trading psychology problems at all. So most trading psychology problems can be fixed with better trading procedure, which is what today's webinar is all about. So why give it away for free? Couple of reasons. Some people don't think they can come up with a creative idea for an entry setup. Easy fix, you can use mine. And I've always shared all my trading methods and all my trading results, even when they were bad. And by sharing what I know, great traders have wanted to collaborate with me. I mean, you're going to meet some of them on the list over the next few months. And as a result, the caliber of people that I get to collaborate with, they're hedge fund guys, investment bank guys, HFT programmers, economists, and you know, I'm just a guy trading out of his bedroom. You know, why would these sort of caliber of people want to work with me? And it all came from sharing and not hoarding knowledge. So it's working, and I continue to work. I continue to do more of what is giving me the good results. And more or less every good thing that's happened to me in my trading career has come as a result of me sharing my knowledge. And so I'm going to keep doing it. So I hate the trading educator industry. I've always hated those guys. They just had a big lend of me when I started trading, especially those assholes from that Elliott Wave group, Robert Prechter, and I spent thousands on their courses, and it was all crap. You know, it was all just rubbish.
What would you say we're now? Are we fifth of the fifth, third of the third?
I hate that stuff, man. I hate it so much because
it captures, you know who it captures, Scott? It captures guys who are about a year to two, maybe going on their third year, I find, even today. And they think it's going to complete their technical analysis knowledge, and it just makes things harder. It's a good thing to talk about over drinks. That's about it.
It captured me, to be honest. It's such a compelling story, but it's like those pre-Copernican models of the sun, you know, where they had all these before they realized that the Earth revolved around the sun. There was all these complicated models of why the sun and all the planets revolved around the Earth, and they had all these complicated maths and complicated theories, and it was all complete crap, obviously, because the Earth revolves around the sun, not the other way around. But there were people who spent their whole lives studying this shit, and that's what Elliott Wave and Gann theory and cycle theories and things like that are. They're a dead end that has some use. They're not completely useless. They're not completely baseless. But overall, as a way to make money from the markets, there's some stuff that I still use about Elliott Wave, but I certainly don't trade on it. God damn. So I personally wasted years on baseless theories and dead ends. I would like to save others the suffering that I experienced. And it really was suffering. You know, watching the 2010 market rally and thinking that a third catastrophic market decline was about to come and shorting again and again, that was suffering. That was real suffering for me. And until I gave that shit up, and I would like others to avoid that. And it doesn't cost me anything to share. So if I'm going to share an edge that's going to be arbitraged away, I probably wouldn't share it, to be honest. But the stuff that I share it's not easily arbitraged away. So why is discretionary trading so hard? It's because we evolved to see patterns. Pattern matching is part of our DNA. And we talked about this last time. You've ever had the experience where you sit down to look at markets and you immediately notice a setup? So like, what are the odds that you sit down and then at that exact time there's a setup right there? So that's your brain lying to you. Or had the experience where you funded a stock account and then the first day you found like 20 stocks you want to buy. So our brains will lie to us and we see patterns where none exist. So you can test this yourself in a couple of ways. So you can put any random indicators on your charts for a week, like anything at all, any indicator at all, pivot points, RSI, whatever the hell it is, MACD, and within a week you're going to swear that is predictive, and you're going to look at it and you're going to look to try and find order in the chaos by looking at these indicators. So you can also test it by buying just $500 worth of cryptocurrency and then look at some altcoin charts. And I absolutely guarantee you that the day you fund a cryptocurrency account on Binance with some Bitcoin and you go to buy altcoins, you're going to see about 10 altcoins that you want to buy right now. And that's just your brain lying to you. So what's the solution? The solution is to put structure around what we're allowed to do. So we need rules to be consistent, and we need to box ourselves in with rules that stop us behaving like idiots. And because left to our own devices, we will behave like idiots in the market eventually. So when we take trades that are really similar in all respects, the outcome's going to be similar in all respects. logically, and what that means is that when things are similar, they behave about the same, which means that we don't get this situation where our systems completely stop working, we get massive drawdowns. So we get smaller drawdowns, we get an easier time exiting the trade. And the way I think about it is like McDonald's. So a Big Mac is not the best burger in the world, far from it, but it's a reliable burger. It tastes the same every time. The Big Mac here in Bangkok tastes the same as the one in Paris, tastes the same as the one in Rome, tastes the same as the one in America. It's a reliable burger. It might not be the best burger, but sometimes it's better to just know what you're getting. So how did I build this system? I have a huge volume of historical trade data for the failed breakout system. And what I did is I analyzed the winning and the losing trades, paying more attention to the losing trades, actually. And I found several common themes which I think can transform the results of this already good system. And this historical trade data is worth its weight in gold because I don't have to paper trade, because that's not a very good idea for a start, and because I know that every data point was real money that I risked and either won or lost. So what was the big thing that I discovered? And now we're getting into the meat of it. So losing trades happen despite our best efforts, but almost without exception, the very best winning trades, all the multi-R winners, like 85% of multi-R winners, were entered at a low volatility point in the volatility cycle. So what I want to show you here is that we've got a downtrend, we've got a two-legged pullback, and we've got a shooting star. By any measure, this is a great looking sell setup, right? Like there was a time I would have looked at that and gone, oh, fuck yeah, I'm in. That's my setup. But what I want you to see is this ATR, which we're using as a proxy for volatility, just with the standard things, which is at 14, ATR 14. You can see how this is not at the lows here. So look at what happened next. So this is that point, and even though it looked perfect, it came down, got you in, stopped you out, and fucked around sideways for another 1, 2, 3, 4, 5, 6, another 12 hours or so until it reached this low volatility point. Now, this is really important because at this low volatility point, this setup becomes a high probability setup again, and it worked. Now, you can see we have another time. This goes sideways, 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 choppy mess, choppy mess, choppy mess, until this low volatility point. And at this low volatility point, then the market is free to take off. So what I found is that we can avoid a whole pile of trades that look perfect. And Daniel and I suffered with this for years. We used to call it the lure of the perfect setup, one that just looked fantastic. Like this is a fantastic looking setup. This is one that both Daniel and I would have taken at one point in time that just doesn't work.
And we made a rule around that, and we stopped taking those.
We stopped taking them just because they looked too good. They were like
and it had to do with volatility. That was the big thing about it. It wasn't just, oh, it looks like a good setup, let's not take it. The part that we added to it was this ATR part, was when you see things, especially when they're at high, like a spike in volatility, that first setup doesn't work.
Yeah. Okay, so I pulled apart hundreds and hundreds of trades, and this was really quite reliable. So the big winners, the 5R winners, the 4R winners, they all came from entries in the low volatility point of the cycle. So this was a USD CHF trade I took on Friday, and I sent it to the list so you know I'm not bullshitting. So we have a shooting star at the low volatility point here. Perfect entry. That's like a 4R win. If you missed it, there's another retest of this low, which gets you in again. And you can tell that the best entries are happening. You know, here's a hammer candle too. Here's a hammer candle too, but this one didn't work and this one did. What's the difference between this one here, and these two? These two are at the low volatility point of the cycle. And that's all it is. It's like this simple thing really, really transformed the results of this system. So this was a trade I actually took on 6th of July in the Euro futures, and you can see the trading platform puts in the things. This is, so I entered here, stop loss was here, exited half here and half here. So this is a nice trade. It's actually cleaner on. I usually take the setups off Euro USD because the charts look nicer. So you can see we have a deep pullback. We have a retest of that pullback. Now, I don't propose to spend any time going over the rules, but the way these deep retests work is we treat this pullback as a significant low. We need one or more higher closes, which we have. We need one or more lower closes. The setup is complete after this bar. We place an order to go long at a break of the high, which never happens. The next bar, we place the order again to go long at the break of the high, which is filled here, stop loss is here, and it runs all the way to the top of the jar. And you can see that the perfect entry, this one was not quite perfect, right? It's not terrible, but it's not quite perfect. But the perfect place to enter is at the low volatility point, right? Now, what is a perfect trade? So for me, a perfect trade is not the one that makes the most money. The perfect trade is the one that doesn't fuck with me. So the perfect trade is one that just, okay, I'm in the trade. Now I'm making money, still making money. My stop loss is never threatened. Even if I go to break even, my stop loss is never threatened. A perfect trade is one that doesn't cause me any angst. It's like, oh yeah, I'd do 100 of these. Like, you're never going to experience any adverse emotions from this because you're just winning. Okay, so I want to look at AUD USD, which is yesterday. So as a general rule, we take shooting stars in downtrends. We have a downtrend here. This is a shooting star. The volatility is high. It didn't work. This is a shooting star. The volatility is falling but not low, and it didn't work. It would have. This one here, shooting star, it's not low yet. It's still about here, and it started to work and then stopped you out. But the one which actually worked, and this ran away to be like a 7R winner overnight, this is the one that happens at the low volatility cycle. So I think it's critical that we all understand this. So does everyone get this concept about low volatility? So I want to make sure that everyone gets this concept because it's key. It's key to everything is that your setups become more reliable at the low volatility point of the cycle. Does everyone get that?
Well, nobody's saying no yet, so let's give it a couple seconds. Shout out to Peter. He gets it.
Peter always gets it. All right. So there are two huge advantages here. So firstly, volatility is far more predictable than price. Far more. And volatility comes in these nice steady waves up and down. So extremes of both high and low volatility are unsustainable. So entering at a low volatility period, it dramatically increases the odds of a strong move starting soon. What sort of moves do we want to trade? We want to trade strong moves. We don't want to trade choppy moves. We want our version of a good trade, a trade that doesn't cause us any angst. So secondly, when you enter at the low volatility phase of the cycle, your stop losses are super tight. So this gives you a massive increase in risk reward, and it allows for more outlier winners. So if volatility is higher, if your candle size is bigger, obviously you need a wider stop to avoid whipsaws, right? So a wider stop is less bang for buck, is less outlier wins, is no more 4 and 5R wins. So this phenomenon exists across all time frames, across all markets. This is the recent Euro US dollar daily chart. And you can see this perfect time, the low volatility time, is the time that just kicked off this massive move that we have. And the high volatility times, look up here, this is not a market I want to trade. This is not a market I want to trade. These markets suck. This market, after the low volatility time, this is money. So let's get down to the nitty gritty. So what do we need? We need a strong trend on multiple time frames. We've got it's not quite the same, but it's a similar market scan as the failed breakout system. We wait for a low ATR 14 reading on the 60-minute or the 240-minute chart, and then we actively seek an entry pattern. Now, this is all going to become clear, so don't worry too much. So we have some new entries. They're variations on ones that we know. We have the last chance retest. We have the deep retrace retest. We have the breakout breakdown retest, and we have the shooting star hammer pullback. So let's go through them we'll go through them all. So the trade management here is different than the other systems. So what I have is I have a mix of quick scalp wins, which are just straight 1.25 and 1.5 hour limit exits, and we have some trade setups where we go for outlier wins, where we're going for a 4-hour or 5-hour win. And why are we doing this? Because wider stop setups have a high win rate, but no outlier wins at all. So in those setups, it makes perfect sense to just jump out for a quick win. And so with enough small scalp wins, we don't need to bank profits early on the ones that might be a 5-hour win. So if let's say we took 5 trades this week, and 3 of them we took quick little 1.5-hour wins. We've got enough in the bank that we don't need to bank profits early on in the one that's going to be a 5-hour win. Okay, so our maximum position limits. We're taking 2 trades maximum per day. Now, why? It's because one of the hidden secrets of trading is that virtually any trade that you take at the same time, is inherently correlated. So you can take gold and you can take AUD USD. If you take them both about the same time, they're inherently correlated. Okay, so we can only have 3 open trades maximum, and only if one of those is at break even or better stop. So if once your stop is at break even or better, you can take an extra trade, but really 2 simultaneous trades with open risk is the limit. So if you have choices between setups, you want to take the cleanest trend. Okay, so some trades we're going to go for the knockout, like Iron Mike there, and others we're just going to jab like Mayweather. But we're going to put some systematic processes in place so that we decide according to our system rules. We're not just guessing. Okay, so let's set up our charts. We no longer need the 15-minute or the 5-minute charts in the fail breakout system. So we have a 1 hour, we have a 4 hour, we have a daily and a weekly. We have a you could even remove the weekly if you wanted, but I like it. So the 1 hour, so the 1 hour and the 4 hour have an ATR 14 and an EMA 8, an EMA 21, and EMA 50. Let me show you what that looks like. So I put the 1 hour here, and we have these 3 moving averages, and the ATR. We have the 4 hour, same thing. We have the daily and the weekly. I don't need the ATR in them. Okay, so big point, and this is really, really important, is that screen watching charts is really addictive. You start watching it, and the next thing you know, you're down a rabbit hole, and you're flicking between charts, and you're dropping down to 5-minute charts, and you're trying to work out what happens next. And you think you're learning, and you are learning, but what you're really doing is emotionally fatiguing the decision-making process of your brain. So just the same as if you start snorting drugs, you're going to get a tolerance to it. As soon as you start snorting charts, you get a tolerance to making trading decisions. And to increase your trading performance, you must limit your exposure to charts.
That's one of the worst part about looking at charts all day. I feel like you feel like you're doing a lot, and you might be, but I find usually you're not. Usually you're just
exactly. So yeah, I mean, you probably feel like you're doing a lot when you're checking Facebook too, right? Like that's it.
Yeah, maybe not as much as if I stare at charts all day, but the point is the same. You're really not doing.
That is the
you're not accomplishing. You're not accomplishing a lot.
That is the same turd rolled in a different colored glitter, man. So we check the market 4 times a day. So you can change these times. So the first time should take about 10 minutes, and the other times 5 minutes max each. And a lot of the time, that it's not possible to get a setup in the markets you're following, so you don't have to. So you've got a maximum of 8 a.m., 12 p.m., 4 p.m., 8 p.m. Now you can change these times to suit your lifestyle. These are the ones that suit me, and you change them just by setting up your charts a little differently, I use the 4-hour charts on my charting package. All charting packages let you change that if you want. But you don't even need to do all of these. You could cut one of them out. So the first act of the trading day is to do the daily scan, and it's really similar to the failed breakout scan, but simpler. We define a trending market as one where the 8 is greater than the 21 is greater than the 50 EMA. And what this looks like is the blue line above the purple line, above the red line, and we call it trending. So it's trending all the way through here and stops trending about here. Now, some of you are going to say immediately, I hate moving averages. Moving averages are lagging. Yeah, they are lagging. They're totally lagging. But the lag here works in our favor. Why? Because if you look at this part here where the moving averages aren't quite aligned, nothing is really certain there. This is nothing yet. So we want to wait until we've got a bit of certainty that the trend is on. Your best entries are here, 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 right in the middle of it. These are not the best entries at the end when it's all starting to go a bit sideways. These are not good entries at all, at least with trend. These are good counter trend entries. So even though moving averages are lagging, in this situation, they really suit the system perfectly because we're not trying to, like we speak about with the failed breakout system, think of it like a fish. You don't eat the head, you don't eat the tail, you just want the fillet. So for a currency pair or any other instrument, you can trade equity indexes, you can trade gold, you can trade oil, natural gas, soybeans. I've traded all those in the last couple of weeks. To make it to our watch list for the day, it has to have either a high probability of continuation or a high probability of reversal. Now, this involves reading the tape, which most of you already know how to do from the email list. And the system has counter trend entries, which I don't have time to cover in the webinar today. They're all in the system building masterclass. But the counter trend entries are just straight 1.5 hour limit scalps. So you're not trying to catch a brand new trend and ride it to the beach. You're just making a little scalp.
Are those important, would you say, to the system?
No, not at all. Not at all.
Okay.
Not at all. Yeah. You can safely run it without them. Now, you can trade any sufficiently liquid instrument using this system. Now, I don't trade stocks, but it appears to work fine. I scanned through a bunch of stocks yesterday. It looks pretty good, actually. But if you do plan on day trading stocks with it, please check in with me, and we can generate some better data together before you risk real money. I've got a high degree of confidence with it on FX and futures. I don't yet have that same degree of confidence. Okay, so we have some entry setups. So some of these are new, so let's pay attention. So the first one is called the deep retrace retest on 4 hour. So the elements are a pullback at least to the 21, which is this purple one. Sorry, that should read at least to the 8 EMA. That's a mistake. So it should be at least to here. It can go as deep as you like, but then what we do is we treat the low of this pullback, so the low here, as a significant low for the purpose of the retest variation by setup. So we assume that a pullback to here is a significant low, and then we need a higher close and then a lower close. At this point, the setup is complete. We place an order to go long here, which is not filled the next bar. The next bar, we place an order to go long at the high of this bar, which is filled, and we run up. So let's look at it again. We have a pullback. We need one or more higher closes, which we have a higher close, and we have a lower close. The setup is complete. We place an order to go long right here, stop here. Now, the requirement that we didn't have before is the low ATR on either 1 hour or 4 hour. And you can see that the perfect entry points here are at the low of the ATR. Now we have two winning trades and a loser here. I thought it's kind of intellectually dishonest to pretend that this is going to be all losers, all winners. So this one's a bad loser. There you go. It happens. So let's do this. Let's do this again. So we want to pull back at least to the 80 EMA. I'll change that. It's not the 21. A retest of that pullback, and that can be either a retest variation like these or a retest concept from the masterclass, or a retest. In the real world, 80% of it, more than 80% of it, would you say, Daniel, is retest variation, right?
Yeah, I would say so. That's the most common one. It appears all the time. If you have a loose definition of it, the retest variation can be an entire system, which we've done before with success. So yeah.
Okay, so this is a high probability, high expectancy setup. I can't quote exact numbers because all I've got is historical trade data, and I've only been trading it for a month. it's working out at about 65%. But the system is a work in progress, so I can't, hand on heart say that these are the numbers for the system yet. Time will tell. So far, for me, I'm performing well above 0.5 expectancy, and I'm only on 60% win rate. But I've made a couple of mistakes too. So far, the system is performing really, really well. So trade management. So in this setup, we are attempting to optimize for outlier wins. So the standard trade management is like this. When trade gets to 1.5 R, we move the stop to break even. Don't worry about making notes on this because you're going to get this document, right? So at 3 R, we initiate a 1 R trailing stop. Above 2 R, we initiate a trailing spike low stop. Now, what this looks like is anytime you get a pullback inside these moving averages and a spike low. So we would trail the stop here, 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 and then here. That would be how a 2-hour trailing stop works. So if we got in here, we wouldn't do it here until it gets to 2R, which is about here, and after 2R, our trailing stop is about here. Everyone got that? Okay, so we have some optional exits. So on a spike and channel market, we tighten stop. I'll send some examples of spike and channel markets, but they're very, very obvious. It's from the price action masterclass. So a spike and channel market is a weakening trend. It's where I'll point one out when we get one in some of the other examples because there's a few coming up. So if you get a spike and channel market, those markets are inherently fragile. You can tighten the stop to the bar low on a shooting star candle for a long. And I'll show you examples, so this is going to make sense. It's optional. You don't have to do it, but I find it's good practice. And also the other optional exit is anything you don't like in the price action after 2R, you can bank half the position. So the perfect example of this is a strong reversal bar. So if you're in a strong uptrend and you get a very strong downtrend, you can exit half. Okay, I've got a question. Eddie Welland says, is it preferable to trade with the EMAs going in the direction of the trade? The EMAs were going sideways.
That's not something you and I really focus on much, right? We look more if the EMAs are above each other. We don't really look at the slope too much of EMAs, do we?
No, I don't look at the slope too much because the fundamental basis of this is that if a trend exists on multiple time frames, if a trend exists on a single time frame only, it's probably very prone to what Eddie talks about there, which is just going sideways and reversing or whatever. And the moving averages aren't much use there. The moving averages are only really much use if you've got a trend on multiple time frames. So the idea is that if the trend goes sideways on a 60-minute, but the 240-minute is still a strong trend, and the daily is still a strong trend, that the daily buyers are going to overwhelm the 60-minute buyers. So there's very specific situations where you go counter trend, but we don't have time to go into it today. But in the broad strokes, you only go counter trend when the daily indicates a significant probability of reversal, and even then, you're only going for a quick bang. You're only going for a 1.5 R limit exit. You're not trying to catch the whole new trade, because most often trends are choppy at the beginning and at the end, right? So towards the end of a trend, entries become inherently less reliable. And at the beginning of a trend, entries are inherently less reliable. It's only in the middle that we have the really strong edge in our favor. Okay, so let's look at this one. We have an entry here. We have a stop here. So at 1.5 R, which is here, we move the stop to break even, which would be here. At 3 R, which is here, we move our stop to a 1 R trailing stop, which is here. And every time it moves up, we move this line up, we move this line up. Now, this is a spike and channel market. We have a spike and then a channel. You can see this channel formed here. Now, a channel is a weakening trend. So there's two ways that this can end, with a breakout upside or a breakout downside. The breakouts downside after a spike and channel are most often a change of trend, a complete change of trend. So after a spike and channel.
Yeah, you know where you see this a lot? You see this a lot in cryptos. You see this in cryptos all the time, where they spike and then they channel and then it falls off the plate. Did you go silent, by the way?
No.
Oh, you're back. You're here. Okay.
Okay, so a spike, and so if this is a move that's going to last, this should probably pull back decently and then continue on. But it hasn't pulled back; it's just kept on creeping up. But you can see what's happening is it's going up in a diminishing fashion. The candles are getting smaller than these ones, so it's not attracting fresh buyers. And here's the high of this bar, and after 1, 2, 3, 4, 5, after 20 hours later, we're still only just above there. So we've for 20 whole hours, we've gone, maybe half an hour. That's a move that's just running out of steam objectively. When you see that and you see a shooting star, you move your stop to the bar low on a shooting star. So this is our exit right here. So our entry is here, a stop is here. At this point, we move to break even. At this point, we put a 1 hour trailing stop. And at this point, we move our stop up to here. We get a really nice exit before it changes trends. This was a trade I actually took. Okay, so how can we semi-automate this process without going down the complete quant route of programmers and all that sort of stuff? So I use NinjaTrader, but all the major software packages have something similar. I know eSignal does, I've used it, and MetaTrader does, and I'll show you a workaround in a sec. So this is called Automated Trade Management Strategy. It's in Ninja. So what we do is here I have a stop loss of 34, which is 1 hour. I have no profit target, but I have a break-even strategy of at 51 pips, which is 1.5 R, I'm moving it to 0, which is break-even. Okay, so automatically, as soon as this trade hits 1.5 R, it's going to break even. So I don't have to watch that. Now, we set in this auto trail. So at 112 pips, which is 3 times 34, right? So that's at 3R. We're initiating a 1R trailing stop with a frequency of 1. So every time it gets to 113 pips, it moves up 1. 114 moves up 1. So what this is I'll go through this again because this is important. So if we've got a 34 pip stop loss, 1.5 times 34 is 51 pip is 1.5 R. So 1.5 R, this is moving our stop to break even automatically. At 3 R, which is 112 pips, we're moving our stop loss to 34 pips back from the furthest point. Now, this semi-automation, it does the heavy lifting for you. So what it means is you don't need to screen watch. So when your trade gets to 1.5 R, your stop goes to break even. When it gets to 3 R, it starts the trailing stop. And you know, you can set that and walk away. You don't need to worry too much about this about the spike and channel exits. Those are all optional. So this is a game changer. So what this means is that you set your stop and you walk away. So most major packages have something similar, but if yours doesn't, if you're using some sort of dodgy off-brand thing, there's an easy fix. So you jump on whatever user forums they have, and you ask someone to build a custom strategy to do this for you. It only takes about 20 lines of pseudocode, and it's like an indicator that you can plug into whatever, you know, nearly all software packages have custom indicators, and there's always people on forums who are willing to do it for you, or you just sling them a couple $100 and they do it. So an easy workaround if they don't, if whatever package you're using doesn't do it. Okay, so let's look at the second new setup. This is called the 1 hour last chance retest. So this is on the 60-minute chart. So we're looking for a 1 hour pullback, either just touching or just above all three moving averages. Then we're looking for a retest pattern. The most common is the retest variation. The next thing is that the 4 hour chart is still a strong trend. It's still below the 50 EMA, and the ATR is either very low or is just spiked up. And there's two different situations. I'll show you them both now. So here, this is what it looks like. So on the 4-hour chart, we have a very strong trend, right? This point right here is the point that we're looking at. You can see, and this is what it looked like on the daily chart. It was this one here. Strong trend on the daily, strong trend on the 4-hour. But the 1 hour, that looks like ass. In a million years, you would see that and think, oh, wow, that trend's over. This one is probably done, right? So the idea is that we have low volatility and a big spike above the moving averages. So the 60-minute should look quite bullish, while the 4-hour and the daily look very bearish. Now, if you think about what's happening here, these 60-minute chart buyers are thinking, wow, I've got to be long. You see that buy, you think, wow, short trade is over. It's on. And then we wait for a retest. Now, a retest, significant high, lower close, higher close, place our order to sell here, never filled, order to sell here, place again, and we're short here, stop here, runs all the way down with our normal trade management looking for outlier winners. Now, we need this retest setup, but the 4-hour should still look okay. It should not be above the 50 EMA. Okay, now Peter has a question. The ATR is of fundamental importance. Wouldn't it be helpful to specify an ATR level for entries? It would, except for one thing. The ATR is, and volatility in general, it's a fundamental property of volatility, that volatility can only be measured in context. So there's no such thing as absolute levels. There's no such thing as the VIX is low at this level or volatility is low at this level. It's only has any relevance compared to the previous, 30 bars, 60 bars, 90 bars. So yes, you could specify a level. The lowest low in 30 bars would be a good place to start. But it's one of those things that it's easy enough to see. I can't think of a time when it's not obvious. It's nearly always obvious. So things to note. So the last chance retest setup, it should look terrible on a 1-hour chart. Like this looks like a bar that you would never take. So the whole rationale of this bar is that look how big this bar is compared to all these previous bars, right? There's only two things that can cause a massive bar like that. One is people getting stopped out, and the other is idiots jumping in at the same time. Now, either of those are capitulation points. So when all the idiots get long together, we get big bars. When all the shorts get stopped out of their positions, then it can go down again. So we look for this bar, then a retest of that bar. So we treat this as a significant high. We need a lower close, which we have here. We need a higher close, and it's difficult to see, but this is a higher close. And we could go short here, stop here. And you can see another version over here, which is a less dramatic one. So we have two broad types of last chance retest setups. One is this one where we have a big capitulation spike, and the other is where we have a rally that's smooth and orderly but just running out of steam. This decreasing volatility is running out of steam. So if this counter trend rally is running out of steam, hits here, lower close, higher close, short here, stop here, boom. Okay, I thought we were only checking the charts a few times a day. What's this with the 1-hour charts? Okay, so here's how it works. So if you see the setup on the 1-hour chart, you're still only checking your charts at the 4-hour rollovers. You see it on the 1-hour chart, but you only take it at those times, the 8 a.m., the 12 p.m., the 4 p.m., the 8 p.m. Now, why does this work? It works because we're entering at the low volatility time. At low volatility times, by definition, price does not move around too much. Doesn't move around much at all. So chances are we're still, if you're used to entering in low volatility trades, they tend to mess around and do nothing for a couple of hours first before they go. So you're really not risking too much by not being there right in front of your screen, except at these times. So what if the setup is already triggered and we should be positioned at the 4-hour rollover? First of all, chill out. So we have two situations. Situation one is if we had have entered that trade, like let's say we would have entered this trade and we're here. We can probably get in at a better price than we should have been in. So if you can get in at a better price than you should have been in, you use the correct position sizing. You don't use that as an excuse. So let's say you're risking 10 pips, but you can get in at a 5 pip risk. You don't just take twice as big a position. You take the same size position, but then if you lose the trade, you're only losing 5 pips instead of 10, which means you're only risking a half an hour loss. That's how you do it. So what that does is that it means that every now and again we're going to have some trades which aren't 1 hour losses. They're going to be half-hour losses, which is going to decrease our average loss, which is going to increase our expectancy, because our expectancy is the average win multiplied by the probability of a win divided by the average loss multiplied by the probability of the loss. So it's going to affect our trade expectancy calculation. So the other situation is where you have to chase the market a little bit. So at the next rollover, we look at the 4-hour bar and we place a sell stop order at the low of the next 4-hour bar. So that would be so I'll show you an example. It's going to make it clear. So the setup here is complete at 10 a.m. We have a spike in volatility off a low. We have a lower close. We have a higher close. Setup is complete. Place the sell order here. Place another sell order here. So obviously it worked, but it's complete at 10 a.m. Our rollover is at 12 p.m., which is here. What do we do? So at the 12 p.m. rollover, our bar looks like this. We place a sell stop order here with the price here, and we've got a little bit more risk, but not too much. And that's going to be a fairly common situation. Now, the trade management for this setup. If you have to chase the market too much, like if you have to make your stop much wider because the setup is triggered earlier, then you always use a 1.5R limit exit order, and you treat this as a scalp. 1.5R scalp is just a scalp. So if you don't have to trade the market, if you don't have to chase the market at all or much, if it's 1 or 2 pips, then you just manage it like all the other setups looking for outlier wins. So the trade management is as before, exactly the same. So our stop goes to break even at 1.5R. At 3R, we institute a 1R trailing stop. Above 2R, we use a trailing spike low stop. Spike and channel market, we tighten the stop on a shooting star for a long. And on a strong reversal bar, exit half on close. Alex Araya, do you show the setups live? Yeah, I do most days. I shoot a video. At the end, I'll once I finish teaching the system, I'll load up the charts for the day, and we'll take some trades for right now. Okay, so what if you missed the setup? This is never a big deal. You nearly always get a chance to enter on a retest setup. So this was the point where that 60-minute trade kicked off, right? But you can see we also have a retest of that, which gets you in here, and I'll show you. So you can nearly always wait for the inevitable 4-hour pullback, then retest. So we have a significant high, we have a lower close, we have a higher close. Setup is complete. Place a sell order here, never filled. Sell order here, never filled. Sell order here, filled, and that's roughly 1, 2, 3.5, 4R, something like that. Okay, the final setup is one you probably already know. It's a shooting star in a downtrend or a hammer in an uptrend, but it's on a 4-hour. It must touch at least the ADMA, and it must be either at low ATR or just before or just after a low in ATR, and it must have a retest of the high on a 1-hour chart. So what it is a few more conditions that we place on the shooting star to increase the probability, because as we know, the Thor probability is only about 50%. So we need to increase that probability. So this is something that that Peter emailed me earlier today. This is a shooting star in a downtrend, right? It worked lovely. But if we unpack this period of time was right here. And so this is a retest of highs. So we have 1, 2, 3, 4 lower closes, 2 higher closes. So this is an implicit retest of the high. We go short here, stop above here. The volatility is low before it's creeped up. All right, guys, so let me ask you a question. So how would your life change if you were trading like this instead of how you trade now? And it's not really about the money. It's not it's not really just about the money. It's more about the serenity and the consistency. How would it feel to trade a system which is profitable 8 out of every 10 weeks? How would it feel to be able to pay your bills every week out of your trading profits like I do? I live off my trading profits, and it's a good feeling. It adds meaning to the decade worth of work I spent learning this stuff. To actually be able to feed my family off this makes a big difference. And to finally start compounding your account into something life-changing, how would that feel? That instead of this, so before I started trading systematically, I had this tremendous, it was like the sword of Damocles hanging over my head that one day I might have to give this up. Like what if I blow up my account and I have to tell my family and my friends that, yeah, I know I was a pro trader, but I sucked at it and I need a job. So let me ask you one more question. Do you need my help making this a reality? Because that's what I'm here for. And would you like to work with me directly? And together we can implement the stuff that we talk about. So just knowing the entry rules and the exit rules isn't everything that you need to start making money off this. So what you really need is a step-by-step plan for practicing and then gradually implementing the system. And you need a monitoring, you need a record-keeping process to know when you're ready to trade live and to know when to stop trading if you're not trading well. So I know it's a bit awkward, but I have something to sell today. So if you want me to, I can show it to you now. And if not, I'll just cry in the corner. Does everyone want me to keep going?
Yeah, remember it's 8 seconds delayed for them, but hopefully they want you to keep going. If not,
okay. So
find a nice corner in Bangkok.
All right. So the way that we always do this, like we do every time, is we add a new system to the system building masterclass, and you guys can get it at the old price for a day, and then we up the price $100 every time. So every time, it's what we've always done. Every time we add a new system, we put massively more value into the system building masterclass, and then we raise the price. So today only you can get it at the old price. So as part of the system building masterclass, you get an incredibly deep dive on the system, a deeper dive than we've ever done, deeper than the failed breakout system, deeper than anything that we've done. So you get the exit rules for the failed breakout, the discretionary, the 4-hour mechanical, the every time frame mechanical. You get a deep dive on every one of these entries that we've discussed today, with every nuance and every subtlety. You also get the Protectar exit methodology for the mechanical systems, which is the old way of doing things, which I think is superseded by this new way, but you might prefer the Protectar exit methodology. You get lots and lots of example videos of me live trading the system, and there's a lot of that there. You get screenshots, you get spreadsheets, you get everything you need to make this a reality. So introducing the System Building Masterclass, which is the largest repository of complete high-performance trading systems. So you're going to learn every aspect of building trading systems of all types. So with an expert holding your hand every step of the way. And Daniel and I are going to work you through the process of building a high-performance system that suits you perfectly. And we're going to break it down into bite-sized chunks that anyone can do. And what I inevitably find is that people who want to trade one of my systems, they end up changing it. So sometimes they make changes that I agree with. Sometimes they make changes that I don't agree with. But I've seen people add pivot points and and stuff that I don't really like, but still manage to take one of my trading systems and customize it for themselves and turn it into something good. So some people might take take a subset of the entries. Some people might add an extra indicator that they feel an affinity with. Some people might take some of my stuff off. They might change the moving averages for linear regression lines or whatever. And what we do is we show you how to test to make sure that you're improving and not going the other way. So it contains every single thing that I know about building trading systems. It's my entire life's work. It's distilled into bite-sized chunks. It's a step-by-step process for conceiving, designing, optimizing, testing, and implementing a high-expectancy trading system and my own trading system rules. So what's in the System Building Masterclass? It's 10 hours of video. It's actually going to be more than that now. It's 13 hours.
Yeah, we might be over 50 videos at this point. I don't even know. I haven't counted since March.
It's a metric fuck ton of stuff. I'll tell you that for sure. Okay, Daniel has upgraded the spreadsheet package, so we've got spreadsheets to help with every aspect. Spreadsheets are really good now. We haven't got a PDF workbook anymore. We superseded that. We've got done for you systems.
We might add one though. We might add some PDF over the next couple months.
Okay,
like
so we get
some notes and stuff.
We've got done for you systems to use as examples. It includes the fail breakout system, the 4-hour mechanical system that we've looked at today, the Crazy Ivan system, the Thor system, and more. We've got my favorite part of it is that we've got deep dive hour-long videos on the most popular system types. So trend following, mean reversion, stock-based mean reversion, volatility breakout, momentum, and pattern-based systems. We just do a very, very deep dive and I just unload everything I know about building every one of those systems. And that's definitely my favorite part. So we've got complete done for you systems that you can either adapt for your own purposes or trade as is, with records in some cases. So we've got the Crazy Ivan pattern-based FX system. We've got the modified Crazy Ivan for intraday FX. We've got the 4-hour mechanical. We've got a stock mean reversion system, which is really quite good. It's got above 66% win rate. We've got portfolio rebalancing systems, which are for longer term 401k type accounts, retirement account type stuff, designed to beat the market by a couple of percent every year. We've got a basic momentum system, and we've got a slot in bear market system for when the market we're in the strongest phase of a bull market now. It's arguably that's a dope system, and it's
the slot in bear market. Oh yeah, the perma bear inside me loves. It's so simple. It's just such a simple system, but it's a good. I feel like it's a good hedge to your long stock heavy portfolios. You run it on another account, dude. That's a good system.
And we just stole it start to finish off a hedge fund who's actively using it. They've been trading it for 15 years. It's so long short hedge funds, they go long.
Well, I wouldn't say stole. It's part of that shared knowledge you went back to in the beginning. You give knowledge and they give knowledge back, right?
They were cool with it. But yeah, it's a production system that's being used to trade more than hundreds of millions of dollars right now, and has done for over a decade. It's an excellent, well-researched system, and it's very simple too. So we've got the mean reversion cookbook, which is there's only a few different ways to do stock-based mean reversion, and you find an entry technique you like, you find an exit technique you like, you find a universe you like, and then you backtest it, which we show you how to do. Mean reversion backtesting is really simple compared to other backtesting, and it actually works. You don't need to be a programmer to do it. And so it makes it very simple to build stock-based mean reversion systems, which are the low-hanging fruit. If you don't want to learn a lot about price action or reading charts, stock-based mean reversion is for you. So we've got the failed breakout intraday FX system. So here's what you're going to get. You're going to get the lifetime access to the System Building Masterclass, which I reckon is worth about $2,000. You get the failed breakout intraday FX system and the 4-hour mechanical system. Those are worth $3,000 each for sure. I paid $3,000 to learn the first one. So if all this did was finally let you get some financial reward for the thousands of hours that I know you spent learning this stuff, would that be worth it? So if all this did was cut your trading day down to 20 minutes a day like mine is right now, would that be worth it?
That's worth it.
Boy, if all this did was stop you using other people's setups and systems and just settle down with one system and just stick with it for years,
our daily systems take longer to execute than this 4-hour system does.
Oh, for sure. So if all this did was let you make the jump from I'm a hobby trader to I make my living from the trading the financial markets, would that be worth it? Because I know for me that was always the dream, to eat what I kill, be a hunter gatherer. There's an element of the heroic in trading, and that was always a big part of it for me. So if all this did was stop you from the inevitable disaster that happens when you try and trade doing the hardest type of trading there is, which is no system, would that be worth it? And if all this did was allow you to compound your small account into a decent account that you can live off, would that be worth it? So that's not all. So you're going to get the lifetime access to the system building masterclass. You're going to get the fail breakout system. You're going to get the fail breakout intraday mechanical system, which we just looked at. You're going to get Daniel's essential spreadsheet package for $4.99. So having spreadsheets to do the heavy lifting drastically reduces the scope for mistakes. It instantly makes you a much better trader. I know our mistake rate dropped by 76% when we started iterating to our current version of the spreadsheet, just because there was less thinking, less moving parts. So here's what you're going to get. You're going to get lifetime access for $2,000 value. You're going to get the fail breakout systems, both of them for $6,000. You're going to get $4.99. You're going to get the Crazy Ivan complete system with real-world results, spreadsheets, instructional videos. I paid $13,000 to learn that.
I can't believe we paid $13 just for that one system. I mean, it's a good learner system, but damn, that's a lot for one system.
It was a good way to learn, but yeah, it was a lot. Okay,
yeah.
So if all this did was kick your ass into gear and finally make you practice a system until you can trade at an expert level, and finally go from learning to I earn my living from the markets, would that be worth it? So here's what you're going to get. You're going to get all that stuff, the system building masterclass, both intraday FX systems, Daniel's spreadsheets. You're going to get the Crazy Ivan complete system with 4 years of trade results. You're going to get the Protect R exit methodology, which is a plug-in exit methodology to optimize marginal and pattern-based edges. You can automate that. I've automated it before. We figure it's worth about $1,000. If all this did was save you from months or years of dead ends and blind alleys, would that be worth it? And if all this did was allow you to stop trading your stock picking systems and slot in a bear market system when this bull market ends, so you can actually make money while others are bleeding and not just hold through another 2008 event, would that be worth it? So here's what you're going to get. You're going to get all this stuff. The $2,000 value, the spreadsheets, you're going to get the Crazy Ivan complete system, you're going to get the Protect R, you're going to get the slot in bear market system. It's going to cost you thousands of dollars to learn this privately from me. If I'm even available, I'm not. To learn this by trial and error, it could easily wipe out your whole trading account. And it's certainly going to run into tens of thousands of dollars. I know I've spent many tens of thousands of dollars learning this stuff. So what about the opportunity cost of just investing in crappy courses that just get you past beginner level, which I also did, or wasting years going down blind alleys and dead ends like I did? I spent a year of my life learning wave theory. God, what a waste of time. So here's what you're going to get. So you're going to get the system building masterclass. You're going to get the intraday FX systems. You're going to get the essential spreadsheets. You're going to get the Crazy Ivan system, the Protect R, the slot in bear market system. The total value is $25,499. So I'm sure you can see that I could charge you that for this, especially considering that Van Tharp's course, which is far less detailed, only on discretionary systems, costs $60,000 US. It doesn't even contain system rules. I'm not going to charge you 25 grand. I'm not going to charge you $2,000. I'm not even going to charge you $19.99 or even $9.99. As my gift to you, allow me to present the System Building Masterclass, the Fail Breakout Intraday FX Systems, total value $25,499. You can have it $5.99 for everything. So if you want this, go to scottphillipstrading.com/system-building. So that's scottphillipstrading.com system-building. So you're going to make this back. You're going to make $5.99 on the first trade. Even if you're trading a small account size, you're going to trade $500 Rs. This is going to be literally one trade. And if you don't think my lifetime of knowledge is worth one single losing trade, I can't help you. So the price goes up after every webinar. Now, Daniel, what time does it go up?
I don't know. You tell me when you want to raise it. I thought we were going to leave it open an hour. It sounds like you felt more generous, and we're going to leave it open for 24 hours.
Let's give them 24 hours.
Let's give them 24 because we got people in the UK who are asleep for this. Tomorrow before I go to sleep, late East Coast, I'll raise it at some point. So
All right, so that's scottphillipstrading.com/system-building. Now, do you want? Can I actually personally help? So, what I really like, the most rewarding part of this process is that there's some dudes in our group, like Peter, like Max, like Craig, a number of others who are just really serious guys, and they're willing to roll up their sleeves and knuckle down and do their work, and I love being involved in that creative process of system building. And if you join right now, I'll give you 2 months free, and that's worth, I charge $99 a month of unlimited assistance from me. And unlimited means what it says. It means you can pick up the phone, or you can get me on Skype. Probably about 14 hours a day you can get me. I know nearly everyone in the group. They just, we become mates, and they're building their systems, and they've got like a couple of questions a day, and they just shoot them across to me. I answer back. We jump on Skype if we need to. It's like having me there at your beck and call. So you can so if you do this right now, you can have, this is only available during this launch. It's a one-time offer. So you join, and then it asks you if you want this. You get 2 months for free. There's no problem if you cancel it. If you're not using it, you won't be billed. Daniel's a world-class expert in trading spreadsheets, and he knows as much about trading systems as I do. And in execution contests, Daniel consistently outperforms me in discretionary systems when we trade head-to-head. So after the order form is complete, you're going to be offered 2 free months. So you just click yes, and you can cancel at any time in the first 2 months and not pay a cent. So there's only 100 people for this intake, and that's why we open up again. I don't have enough hours in the day, and I don't want to service any more people than that. So once they're gone, it's gone. If it happens today, or if it happens a week today, we just close it up. And the guys who've been on the list for a while, that we close it up for a month or two at a time. I'm not shitting you. This isn't some false scarcity bullshit. I don't do that. It's just a simple fact of I only have so many hours in the day, and I service it properly. So before we go, I'd like you just to imagine how life will change a year from now, after you built your own trading system, or after you trading your system. So you're going to have a year of totally professional trading under your belt. So you're not going to care about what the market does tomorrow. Your total focus is not going to be on predicting market direction. It's going to be on trading correctly. You're going to be calmer. You're going to be happier. You're going to be doing a fraction of the work, and you're going to be making dramatically more money. And this life is sustainable, and this life is for you, and you should buy it now, and you should buy it. I really think it's a fantastic course. Honestly, I wish it was available for me when I was learning. I would have paid a lot for this course. I really would. And you should buy it, and you can get it at scottphillipstrading.com/system. Now, let's take some.
I'd probably pay 5 to 10 grand for this, honestly, and I'm a cheap fuck. But there's a lot in here, because there's not a lot of resources that show you all the different kinds of systems. People just talk about price action and technical analysis, and that's one thing we didn't do for this course. But hey, there's a couple questions I sent you in the chat. One was interesting about how this compares to Tim Sykes's course, which I thought was a good question.
Okay, so Tim,
and I'll let you answer that.
Tim Sykes is doing a very specific thing. What he's doing 2 things. One is he's looking for very thin pump and dump penny stocks, which is a greasy way to make money. It's highly illegal, and he's shorting stocks that are in the pump stage and likely to dump. Because he's getting in ahead of you, he's making like 10 times as much money as you will doing that same method. So he's not quite a scam, but he's certainly not legit. He's like, Daniel's met him and hung out with him. Daniel likes him, but I think he's a
good guy. No, he's a great dude. He works hard. I've nothing bad to say about the guy's character at all. I think it's a good method for very small accounts. I don't think his method is scalable to, say, a $500,000 account. I would not.
I think anyone who's showing pictures of themselves in private jets and Lamborghinis is a complete fucktard. And I think by definition he's fraudulent. He's advertising it in a fraudulent way. He's operating in a fraudulent sector of the market. He's doing something which is arguably illegal, and I think he's a fuckwit. So that's my opinion. Daniel has a slightly different opinion.
Yeah. I would say for small accounts, his strategy can work. You have a $25,000 account or less, $10,000 account. You want to fuck around with penny stocks? Okay, go ahead. But I think if you're doing serious trading with a serious amount of capital, over 50, $100 million, yeah, I would not be looking at penny
Don't
stocks.
trade penny stocks. Penny
That's
stocks.
what are you doing? You're
penny
better off.
Just don't do it. Like Daniel, sorry, Daniel, you're wrong. Penny stocks are for fuckwits and stuff. That's.
Listen, we can disagree. I could see with a small account you can compound it up. There's an opportunity there.
Look,
you just say fuck it.
But it's just such a greasy thing. It's like
it's greasy. You're better. That's why. Listen, in today you have cryptos. You want something that's crazy. You want something that can go up a lot. Do cryptos. Don't do this penny stock bullshit.
Crypto is the new penny stock, basically. All right. So I've got some charts open at the moment. Is there anything people want to see? Anything people want demonstrated in more detail?
Let's see. He was asking, how is it illegal? I don't know. We're not going to talk about more penny stocks. That's not what we do.
Look, if you want to trade penny stocks, fucking have at it. It's illegal. It's illegal because you're not allowed to trade off insider knowledge. So what he does is he tells 10,000 people to buy this shitty 2-cent stock. And when 10,000 people buy the shitty 2-cent stock, it has to go up because 10,000 dumbasses are buying it at once. Now, is it illegal to tell 10,000 dumbasses to buy your stock? Yeah, it is. Yeah, it is. It's illegal stock manipulation. It's pump and dump. If you don't think pump and dump scams are illegal, then you don't think they are. But they are. And the simple fact is the execution of these of pump and dump scams is so problematical because you have to be in and out. You have to be in and out quicker than him. And believe me, he's jumping out before you because he's got a bigger position size than you. So I don't think that's sustainable. I think any sort of trading stuff which is marketed with Lambos and private jets is marketed at fuckwits. So if you're a fuckwit and that's appealing to you, fucking have at it.
Hey, a couple more questions I'm messaging over to you. How are people going to get the PDF? Are we going to email it out? What are we?
Let's email it out.
Sounds good. Got another question in there. Message to you.
All right. Proof of what? What do you want? You want proof of my results? Look, I've only been trading this this a month, so I can only tell you my own results. Is I'm trading above 0.5 expectancy now. How about I share my live? How about with the PDF? I send my live trading spreadsheet out with every screenshot before and after. So you can go through the trades that I've actually taken, including the losers. Good enough?
Probably. Here's another one for you. Thoughts on the robustness of system if it only works an hourly, 4-hour, etc. This is an interesting one because I think just to take this one first, it's a misconception that a robust system has to work on every time frame. I used to believe that. That's complete fucking bullshit.
Yeah.
You have trend following systems that work great on daily, on weekly time frames. You take those trend following systems and you apply them in a 5-minute, I'll talk to you in 3 months when your account is zero. I've done that. It doesn't work. It doesn't translate the same way. What would you add to that?
So what I would add is this is not a question of opinion. This is a hypothesis you can test, and you should never take anything I say or anything Daniel says as being gospel because it's not. You should take that as a starting point for testing. And okay, so classical trend following is buying like 50-day breakouts, right?
Yeah.
So, any market that closes above a 50-day high, you're buying. Any market that closes at a 50-day low, you're selling. That's all trend following rules are. Sometimes they put a market filter in, like this moving average has to be above that moving average. If you take a simple, stupid system like that compounds at around 16% on futures markets, run on daily charts. You take that same thing on hourly charts, and it's a negative edge. and a strong negative edge. So, all the empirical evidence that I've ever been able to produce is that trend following is not only an unequivocally better edge in the long term. The longer out you go, the better the edge becomes. So what we see is that the edge on 12 hours is better than the edge on 8 hours, better than the edge on 6 hours, better than the edge on 4 hours. So we have a very clear progression that the edge is getting, especially in trend following, the edge is getting better and better. So a system is specific for the system. It's not.
Yeah, it's not going to work throughout everywhere. I've blown out, or about 8 years ago, I blew out 2 accounts in 1 year because of the belief that a system needs to work across all time frames. And I took a system that worked really well on a daily, and I said, well, I want to make more money with it. I want to take more trades. I want to take more risk, compound, and I traded it on an hourly, and I blew out.
But you remember we fucked ourselves by trading the last one. Why?
Dude, completely forgot. We did it about 2 years ago. We took a system that works great on a daily again. We said let's raise the ante. Let's do it on 8 hour. We're gonna doing $1,000
make more money. We stopped after we lost about 50 grand on it, right?
We lost just about 50,000. It hurts to say, and we lost about probably. I want to dumb it down. It's like 35,000, but I think we lost. I think we lost 50 grand in 2 months.
Yeah, and that was totally us. We just assumed that a system that it wasn't just good, it was great on daily, and it had a huge amount of supporting data. We just thought, fuck it, it'll work on the 8 hour, and it just lost like an automated losing machine, right?
Yeah, no, we gave back our early years profits. That sucked. That was a stupid decision.
It was a stupid decision. Yeah, that one sucked.
So, let's see. Any other questions? What else people got? Let's see. What is Harley saying? He spoke about sticking with one method forever, selling us 20 different things. All right. I don't really know how to reply to Harley. He's got a lot of questions, a lot of doubt in there.
So Harley's right. You want to pick one thing forever. Yeah. You do.
Yeah.
You don't want to chop and change. Yeah, but you want to find one thing that suits you, and it might be one of the things that I've tried, or it might be one of the things that I've taught. It might be a modification of one of those things. It might be something totally different. But you definitely don't want to be one of those guys that jumps from system to system to system. That's not a good idea. Harley is completely right about that. You want to just settle in.
Yeah, and I think just to add to Harley, just because I can see some of his questions and where they're coming from, one of the things we don't really do, we don't promise results. We don't promise, oh, you're going to do this, you're going to make this amount, you're going to have Lambos. That's not the approach we take. You know, we talk about risk. We talk about, is it a trend? Is it a range? You talk about concepts, building a system, and executing the system. And that's the perspective that we come from. There's drawdowns in this game. You're going to lose. You're going to make money. And at the end of the day, are you rolling the dice where it's in your favor, or is it not in your favor? Are you trading with a system and a plan, or are you not trading with a plan? And that's, I think, right, that's the perspective we come from. It's not come and trade our method, drink our Kool-Aid, and make $1 billion. That's not what we're
and I'm certainly not saying that mine are the best systems, and I'm certainly not saying that mine are the only systems. Mine are a way of approach that's statistically valid. I've taken a look at a lot of other people's systems, and there's plenty of ways to the top of the mountain. I mean, you might have a different way, but what I will say is, having known a lot of professional traders, they all trade with a system. As long as you have a system, and that system is an edge, and you keep proper records, and you revisit them regularly, and you don't make any mistakes, you don't need it. You don't need to buy anything from me. You don't need anything. If you're already trading with a system, your work is done. It doesn't matter if it's a great system or if it's a terrible system. As long as it is a system with an edge, you don't need anything from me.
Yep, exactly. Who do we have? Who is that one trader who is a better day trader than either of us are? Was it Harry?
Yeah, Harry. Damn, he's a wizard, dude.
Harry's a better day trader than I was or ever will be. And that's one of the guys who's we've worked with, right? And he had no plan, I think. He had no spreadsheets. He was just shooting from the hip.
but this guy, this guy's a wizard. He just has a really, really good feel for it. He has like a above 90% win rate scalping these DAX futures, I think it is, and he came to me because he was experiencing all kinds of psychological problems, and because scalping is like that, it messes with your head, and so what would happen is he'd run 90% win rate for ages and then give it all back in a single day.
Yeah, exactly.
But he's great. He's like he's better at reading the price than I'll ever be.
All right. I don't know if we have any more questions or if anybody else has anything to add. How about you? Before we good to go here?
I'm good. Yeah. Thanks very much for your time, everyone. We'll get you that PDF out shortly, and everyone, thank you very much for your questions. If there's anything else you want to ask, just grab me on Skype. My Skype ID is Wealth Awareness, one word, no spaces. Or you can ask on the, or you can ask in the masterclass group, in the Facebook group, or you can ask on my Facebook page. Just reach out. I've got questions. I'm kind of realistic about what I'm offering here, and I'm realistic about what I'm not offering. I'm not offering some magic bullet. I'm offering a job. It's what it is. All right, guys. But honestly, you should check out this course. ScottPhillipsTrading.com/system-building. Thank you very much.